how to do long-term investing. What you can see here is my current portfolio. The orange Vanguard S&P 500 that I have there, that's a planned part of the portfolio that will be a part of it next year, but I've included it in there anyway, just so I can get a sense of what the portfolio will look like once that S&P 500 fund is in there completely. And as you can see, if you look at my portfolio, it looks very different from a short-term investor's portfolio. And if you compare this portfolio to how it was a month or so ago when I did my How to Build Your Portfolio video, you'll see not much has changed. In fact, nothing has changed. And this is really the crux of long-term investing. Long-term investing is where you just make a purchase, kick back, relax, and know that the markets will take care of you over a long period of time. Whereas short-term investors have to be hyper-autistic about everything. They need 1,000,001 charts, all going over the place. I mean, if you've looked at a short-term investor's portfolio, it looks like an autistic guy's ramblings. You know, you've got 1,000 different charts, loads of different red and green tickers all over the place, 1,000,001 things to look at, and it's just completely bewildering. Whereas you look at a long-term investor's portfolio, it's so clear and simple. You just make a purchase and you hold on to it for a long time. Now, what I'm doing here is I've introduced a review date system for my long-term investments. So every long-term investment, it will have an expected return that I will give it. And that expected return is either the fixed guaranteed amount that you'll get back if it's a bond, as the green one is at the top, or it will be a lowball estimation of what the absolute worst case scenario expected return would be. And then you set your review date, usually 5 years into the future. The bond review date has the review date for next year, and that's simply because that bond is 1 year fixed. So every year I have to make a decision on that, whether to roll it over onto another 1 year bond or to not do that. But apart from that, set pretty much every single one of them to a date 5 years into the future. And then at that review date, you can then see what the performance has been like. If it's met your lowball number, you can do something. If it's exceeded that number, you can do something. And if it's not met that number, you can do something. And it's literally that simple. You know, so for these here, it will just be a case of kicking back and relaxing on those funds and just checking in on them in 5 years' time, see how it's going. And that's why I'm not going to be tracking these funds on the stock market once I've bought everything that I want to buy in for them. While I won't be out of looking at financial news completely, I will be looking at financial news strictly from a long-term investor's mentality. And so that means I will be looking at, where the markets are going on a macro scale for the next 5 years, what the spiritual implications of the next 5 years are going to be and how that's going to affect the markets, what funds look promising at a given time when I'm looking to buy something. You know, it won't be this kind of absolutely schizophrenic, oh my God, everything's collapsing, everything's going to die. And then literally the next day, it's like, oh, it's fine now. I mean, I had a look at the Apple Stocks app, right? I had a look at some of the financial news articles in there from this recent crash that's happened. Completely schizophrenic, completely bipolar. Yesterday, all of the financial news was screaming down the megaphone going, it's the end of the world, the markets have crashed, it's Jova, guys, it's Jova, game over, game over. And I've looked at the financial news this morning, and there's articles saying, oh yeah, the US stocks are back up now. You know, people are buying them at a bargain. What? Yesterday you were screaming down the megaphone of news, saying that, you know, it was all over and there's a massive panic. And you see, this is the problem you have with, obviously, media in general, is it's sensational. But short-term investors suffer from this sensationalist mentality as well, in that, you know, their life is this up and down roller coaster of buying and selling constantly. And you know, if you're the kind of guy that can handle that, if you're the kind of guy that actually gets excited to wake up at 6 o'clock in the morning, get your pants on for 9 a.m. and be glued into the markets until market close, if you're that kind of guy, then maybe short-term investing is for you, because short-term investors, if they know what they're doing, they probably can make much better expected returns than I'm expected to make on here. I mean, I've heard of short-term investors making, average returns across their portfolio of like 40%. But of course, the old adage is the closer you fly to the sun, the more likely you are to get burnt. And that is very much the case in this scenario. I mean, yesterday and on Friday, I think as well, it was very much brown trousers time for the markets and people who were holding crypto. God, I can't imagine how they slept over the weekend. I can't imagine how they slept on Monday and Tuesday night. They must have been absolutely shitting themselves. I didn't have that problem. I've seen my Bark Balanced mutual fund go down by 2.5%. I don't give a shit. On here, I've listed the review date for that as June 2029. I'm not going to look at that fund properly, analyze it properly for another 5 years. And, if you look at the past 5 years' performance for that fund, it went up by about 14-ish%. So I could not give a rat's arse about that. If you're curious what the October 24, then 1st of April 25 planned buy is for the S&P 500 that I've got, that's mainly because I'm looking to get into the S&P 500 just before the election, because I think just before the election will be a nice sweet spot to get into the S&P 500, because we all know that Trump's going to win. God has already won in that respect. The bullet's already missed his head. Trump's going to win. And, with that in mind, I think it's worth looking at the S&P 500 early. Not too early. Right now, it's too early. Right now, the S&P 500 is completely schizophrenic. It had a massive crash and now it's building back up again, and it's probably just going to crash again in August sometime. You'll want to buy the S&P 500 around about October, when the campaigning begins and when things have calmed down a little in the markets. But yeah, I mean, this is the ultimate question in investing. Do you want to be a short-term guy or a long-term guy? I've put all my bets on long-term, and it's because I'm not interested in that finance bro life. I'm not interested in getting up at 2 o'clock in the morning, having a cold shower, and putting on the face mask like American Psycho does. I'm not interested in that life. I'm interested in saving up a load of money, like I already have done, and just chucking that money onto some funds that I can effectively lock away. And of course, I use my risk score system for evaluating what to buy, and see my How to Build Your Portfolio video if you want an introduction to how my risk score system works. But yeah, I think the past few days have been very telling for what it's like to be a long-term investor versus a short-term investor. Long-term investors have just gone straight back to their porn, straight back to their watching their TVs and their movies. They haven't given a shit, and rightfully so, while short-term investors have absolutely shat their pants and are crying into a toilet bowl and are ready to kill themselves.